Hello, everyone, and welcome to our podcast today. It's been a couple months that I haven't done a podcast. We were just waiting to get into the 2025 year to release the next batch of our podcasts. So today our topic is an update on the Carbon Act and the amendments. So we're going to dive into some of the key changes that have already taken effect concerning South Africa's Carbon Tax Act, following the latest developments in the energy sector. The Carbon Act 15 of 2019 has been one of the cornerstone policies in South Africa's fight against climate change, encouraging the reduction of greenhouse gas emissions. As we move forward, the government has recently made several amendments to the Act. So let's go into exactly what has already changed and what it means for businesses, especially those in energy-intensive sectors. So I think the first part of it is we're going to look at is the alignment and updated GHG emissions methodology guidelines. You might remember that back in October 2022, the Department of Forestry, Fisheries and the Environment gazetted the updated methodology guidelines for quantifying greenhouse gas emissions. These amendments were critical because they incorporated updated country-specific emission factors, what we call Tier 2 factors, and expanded on fossil fuel reporting and fugitive emissions. The changes were based on the 2019 Intergovernmental Panel on Climate Change Refinery Study. So what does this mean for the Carbon Tax Act? Well, as of the 1st of January 2024, the provisions of the Carbon Tax Act have been aligned with these new guidelines. Specifically, Schedule 1 of the Carbon Tax Act has been updated to reflect these Tier 2 emission factors for various fuel types, including the default factors for fugitive emissions. This update has impacted how businesses calculate their greenhouse gas emissions and ultimately the tax liabilities under the Act. However, it's worth noting that this alignment was part of a previous draft bill in 2023. But after public consultation, the proposals were withdrawn to allow further discussions with the Department of Forestry, Fisheries and the Environment. The final version came into effect in 2024, giving businesses time to adjust the reporting systems and calculations for the upcoming tax period. The next part of it is the Renewable Energy Premium Deduction. Now moving on to renewable energy. One of the important amendments relates to the Renewable Energy Premium Deduction. Before this deduction was available to companies that generated their own electricity to reduce their carbon tax liability. However, with ESCOM ongoing restructuring, there has been some ambiguity about whether ESCOM could claim this deduction under power purchase agreements. To address this, a technical clarification was made effective from 1 January 2024. Now, ESCOM and similar entities are allowed to claim this renewable energy premium deduction, even in the context of their restructured power agreements. This change is aimed at making sure that ESCOM remains compliant as it transfers its electricity generation, transmission, and distribution functions. Amendments to the carbon offset regulations. So finally, let's talk about carbon offsets. As you know, businesses can reduce their carbon tax liability by up to 10% through carbon offsets. In the past, only small-scale renewable energy projects where an installed capacity of up to 15 MW would qualify as offsets. But as of 1 January 2024, this threshold has been increased to 30 MW. This change has made to incentivize further investments in renewable energy, particularly in embedded generation and utility scale projects. So for businesses, this means that larger renewable energy projects can now contribute to reducing their carbon tax liabilities. This is a big step towards encouraging more investments in green energy infrastructure. So folks, in conclusion, these changes to the Carbon Tax Act have been introduced to keep pace with developments in the energy sector and to enhance South Africa's ability to tackle climate change. The element with the updated greenhouse gas emission guideline ensures that reporting is more accurate, while the adjustments to renewable energy deductions and carbon offsets aim to spur even more investment in sustainable energy. That's it for today's update on the amendments to the Carbon Tax Act. If you are a business operating in South Africa, these changes will likely impact how to calculate your carbon tax liabilities going forward. As always, stay tuned for more insights and updates. This is 2025. Until next time, this is Vidyan Bora signing off. Cheers.